Right, good evening guys and girls. So I've been quiet on my channel for about 3 weeks now. The reason being I've been adding another layer to my trading and just backtesting. So last week I was backtesting, or the week before I was backtesting. Last week I was doing dry runs or paper trades, and this week I've started live trading. Really small amounts. It's still part of my testing, but doing live trades to because it's a little different when you're trading the current price action, and it's much easier when you look back. Obviously, in hindsight, it's quite clear what to do. Anyway, so what I just wanted to caution everyone or anybody following me about the markets now. So I follow the DXY, which is the dollar index, and the S&P 500. Always open. I've always got these charts open just to look at them to get an idea of what the world markets are doing. The S&P 500 is just one of the stock markets, but it's quite a good how can I say, reference to see what the world economy is doing. So here we see the dollar, but this is on a weekly chart, so it's a huge time frame. So this is from 2001, the high from 2001, pulled the Fibonacci down to 2008 low, and then look at that golden pocket, that 61866 level. So obviously we tested it there, it was rejected heavily, right down to the 382 level. It tried again, the 618, rejected again to the 382, and then it went through, came down, back tested the 618, and now we've gone through. So this is, you can see how it's been reacted, and now for the first time in from 2016, so that's 6 years, the first time in 6 years it's broken through. Don't quite understand why the dollar is so strong. I don't really have to understand, but I mean, they printed trillions of dollars in the corona, in the lockdowns, so that doesn't make sense. But anyway, I'm keeping an eye on the charts. I don't really have to understand that. And then I also look at the S&P 500. That's a really good indication of what's happening, and to go down to the in the economy, that is. And normally that's inverse correlated. So when the dollar is strong, the rest of the world is bleeding. All economies basically really suffer. So I've pulled the Fibonacci from the corona lows to the highs in this year. I think in December, yeah, end of last year, beginning of this year. And then you can see we tested this. So this 382 and 34 is just in the inverse of the 66 and the 618. So I got these levels from a really good trader. It's not my own levels, but they really work. So I'm just gonna zoom in here slightly because I think something quite important has happened here this last week. So here we are. Obviously, you can see when you start zooming in or go down to lower time frames, we broke through that 0.34 level, and we back tested and we lost it. I didn't even spend a lot of time there, so that was quite crucial. If you look back here, it was hugging there, around there. Look at that test, perfect test to the 382. But anyway, I don't have to prove that these levels work. They really do. See the back test, and then we lost it. So this was crucial. Now you know why Bitcoin has dropped so heavily. We tried to backtest it, but we didn't even reach the 382 level there, and now we've actually broken that previous low. So this is really looking quite bearish in the market. So it's not bearish, it's not necessarily sad for me, because I have obviously learned how to short in the last 6 months. It still feels quite weird, but yesterday I took 2 shorts, but I just scalp. I start with a scalp, take quick profit, and get my trade to 0 risk, and then if it follows through, then I will have a small position open for which turns into a day trade and later into a swing trade. But anyway, I wanted to just caution you about this. Don't FOMO in and think we are at the lows now, because we are at $23,000 on Bitcoin. Let me just go over to the Bitcoin chart as well. So we've touched this, I think $20,000. Yeah, so a lot of people were waiting for $20,000. So 20,000 is slightly below, it's around there. It could be a front run because Bitcoin has done that before, but I'm not in any big longs on Bitcoin. Yeah, I'm waiting for a sign of strength before I do that, and there's lots of time on the way up to do that. You can always see it never in a straight line. There's always plenty of time to get into the market. Anyway, I'm not going to go into that. So yeah, I just wanted to show you these Fibonacci's as well. So I pulled it here from the highs, the 28th of March. That pivot, it's not the all-time high, the pivot there, and here was a pivot here because I didn't have all this information yet, so I pulled it down here, and look how perfect we were, just in that range. So I took many trades here. I think from that point there to there, I think I took 19 trades on Bitcoin alone, just working that range. So I'm more than happy for just to stay here forever on the market, and I'll just trade that up and down the whole time. But anyway, what I wanted to show here is so I take that Fibonacci down to there, and then I put another Fibonacci inside that one. So your most important levels is the 618 and the 382. So I'll and as well as the 0.5, but it's not so common to use the 0.5 on crypto, but I see it starting to work quite well on the altcoins as well. So from that one, or that one, I just pull another Fibonacci inside from there to this one. So you'll see there when I switch it on, you can see yeah, there's this dotted line on the outside. So what this gives me now, so it takes enormous amount of time to do this, to look for all these pivots, because who says that's the pivot? Maybe that was the pivot, or that was the pivot. But I switch them on and pull them and delete them until I find levels that are respected. So this one was obviously at levels that were respected. You can see there, I mean, you don't get better than that. And then I start playing. If I find a main Fibonacci that's got levels that works, then I start putting these Fibonacci to Fibonacci. I just call them F to F. So you've obviously seen now what has happened here. This 309 that's like an extended level of the Fibonacci. It's really been spot on there. So you can see and if you pull a Fibonacci from here to there, I just want to make a smaller Fibonacci, or just the golden pocket. You'll see that's quite a good sign of strength. So we've obviously claimed that 146 level and the golden pocket, and we moved up. So that's the first sign of strength I would look for. But we didn't make a higher high there, so we need to make a higher high and then not break this low again. So even here we can play around, but once we make that higher high there, then we mustn't come below here. So this is good what we've got here. So we can go like that, but once we break that higher high there, then we mustn't come below this line here again. So we must do that and make higher highs, maybe test this level, then you can start. So then we've got market structure change, but for now we're just coming down. This can just be quite a big wave, and we can just go drop back down there again. So we need to see that the market structure has changed, and then you can start getting into smaller positions and smaller positions and smaller positions, but always keep your risk. So once this has moved up there, then you can have your stop loss at your entry and make your risk zero. So yeah, always be careful in the market. And yeah, just my thoughts. Be careful and don't rush in. There's plenty of time on the way up. Right, cheers guys.